My name is Terence and I'm from the Fixed Income Division at iFAST. Today I'm here to share a bit about what investors need to know before they want to take on an investment in perpetual bonds. Okay, so for 2017 so far, I think it's been quite a good year for perpetual issuance in the Sing dollar market. We've seen something like 12 or 13 new perpetual issues, and I think that's about probably over a quarter of new issuance in the Sing dollar market this year. So it's been a pretty good year for Sing dollar issuance. A lot of investors are looking at perpetuals, trying to include them in their portfolios amongst their other bond investments. Okay, but what do you really need to know about perpetual? So today I'm going to share a couple of quick pointers, key things that you should know. Okay, so perpetual bonds, I think in essence the word perpetual really means that bonds don't mature. Okay, there's no fixed maturity date. So many investors have this impression that perpetual bonds are never going to mature, they're just going to stay there forever. But that's not true, because most perpetual bonds are structured with a certain call feature. So there are a series of, there are call dates embedded into the structure that will allow the issuer to call those bonds, okay, at predetermined dates sometime in the future. So because these options, these call features are the option of the issuer, so that means the investor doesn't really know when the issuer will call the bonds. In exchange for that kind of tenor or maturity uncertainty in a perpetual, what that means is the issuer has to pay the investor a bit more, okay, more than what they would normally pay on a plain vanilla fixed maturity type of bond. Okay, so for in exchange for that maturity uncertainty, tenor uncertainty, then you're actually getting a bit of a yield pickup when you're buying a perpetual. Okay, so in terms of this higher yield, okay, that's also a function of the kind of structure that we're talking about when it comes to most perpetuals, particularly in the Sing dollar market. Okay, most of these perpetuals are actually considered subordinated capital. So in the unlikely event of a liquidation, winding up, even a restructuring of the company, all these subordinated perpetuals will actually rank behind senior unsecured debt. Okay, so if you're expecting a company to reach those kind of very disastrous outcomes, you do not want to be in a subordinated tranche of debt in the company. Okay, so some of the key exceptions we've noticed in the Sing dollar perpetual market include some of perpetuals from companies like Singpost, also the two Wing Tai perps that are outstanding. Those are senior unsecured, and they will rank pari passu at the same level with the company's senior unsecured debt. Okay, for most parts, all the other perpetuals in the Sing dollar market are subordinated capital. Okay, so one of the other things that investors like to ask about perpetuals is about interest rate risk. Okay, so given that investors don't expect these bonds to mature, or they're very concerned that there's no maturity date, so they're always talking about interest rate risk. How much interest rate risk am I taking on when I buy a perpetual? So the way we like to look at interest rate risk for perpetuals is usually pertaining to a coupon reset feature that many of the perpetuals in the market today, that's embedded in the structure of these perpetuals today. Okay, so what happens in a coupon reset? So at some predetermined point of time in the future, for instance, 5 years down the road, okay, if the perpetual is not called, for example, the perpetual could actually have its coupon rate reset to a new coupon rate. Okay, that coupon rate will be determined for most part by the new benchmark rate sometime in the future, at 5 years' time. For instance, a 5-year risk-free rate or 5-year swap offer rate, plus the initial spread. Okay, so this initial spread is actually based on the initial pricing of the bonds. So in essence, without going into too much detail, that actually provides a form of resetting the coupon, effectively giving the investor a new bond altogether. So a 5-year bond and then another 5-year bond. So it's like a redemption of that bond initially, and then reinvesting it into a new 5-year bond, for example. Okay, so the interest rate risk for a bond, a perpetual like that, will actually be very similar to a plain vanilla 5-year bond. So that's for the most part. Okay. We also want to take note of certain key features in terms of the coupon reset. One of them is actually some form of penalty on the issuer for not calling the bonds. Okay, so an example I'd like to give, for instance, ARA Asset Management. They actually have this 5.2% perpetual outstanding. The bonds are callable in after 5 years, but the coupon rate only happens in year 7, okay, if the bonds are not called by then. Okay, but if the bonds are not called in year 7, that's actually a 300 basis point, 3% coupon penalty if the issuer doesn't call those bonds by then. Okay, so we think that's a pretty hefty coupon step up. Penalty for the issuer to keep the bonds outstanding beyond 7 years, and that actually increases the probability of the issuer calling the bonds by the 7-year mark. Okay, so with that, I've given you a sense of some of the key features you should be looking at in terms of a perpetual bond, what to look out for, coupon resets, call dates, and so on. And actually, perpetual bonds in the marketplace today are a good way of gaining exposure to a fairly large entity. If you want to buy the bonds of a big company, you could get a bit of a better yield buying the subordinated perpetuals of that company as well. Okay, in giving up things like your certainty in a maturity date, and also in terms of the subordination of those bonds, you're actually getting a higher yield in return for those things that you're giving up. Okay, so some of the perps in the Sing dollar marketplace that we like today, some of the examples we've talked about in the past, like First REIT, which the perps are increasingly more difficult to find today. Some of the higher yielding perps in the market from Lippo Malls, Indonesia Retail Trust. And if you're looking for something from a more blue chip type of issuer, perhaps you could look at some of the perps from Sembcorp Industries, or also Maple Tree Investments. Yeah. So with that, thank you very much for watching.